All right, guys, good afternoon. It's still morning here in Honolulu. It's about 7 o'clock in the morning, about 1 o'clock over in the East Coast, if that's where you are, and wherever in between you are. So we cashed out that spider puts this morning. For a little 5-day play, we ended up with 81%. We got a little profit in the morning. We decided to wait to see if the spider gave us another leg down, and good old Janet Yellen came in and took care of that for us. Thank you, Janet Yellen, for at least telling the truth finally. We've talked about this, right? We talked about this since December, that the Fed, they're not, a lot of their placating the market is verbal. It's verbal. It's what they say, and it's how they say it. It's not just talking about interest rates and things like that, and potential inflation and buying 2 years and stuff like that. It's a lot about how they come across. And you saw it today for the first time, probably in months. Anybody from the Fed, whether it's Janet Yellen or Jerome Powell, finally told the truth today that the economy looks like it's starting to run hot. It looks like it might run a little too hot. And guess what? The only cure for that is a rate hike. And so now it comes into play. We've been saying it, right? You guys hear it on this show almost daily. We still believe there's going to be a rate hike before the end of the year. And we'll play it like that. But for right now, guys, we went a little long on the Dow after we cashed in our spider short. We think the Dow's got a little bit more run in it. We need to get some more realism into this idea of the running hot inflation, maybe hyperinflation, and that'll come through the data. So we think the market's still got some bullishness in it. And so we're going to try and play a little momentum play there, like we did with the spider, right? Again, Janet Yellen, thank you for the gift. You turned a 40%er into an 80, 90. Some of our members got 100% on that trade in 5 days. Again, thank you. Other than that, guys, it's just kind of the status quo right now. But what you saw and the thesis behind this little Dow Jones entry off this ugly market is that you're going to start seeing a rotation, and you're seeing a rotation. And we've been talking about it since January. It's been a soft, slow rotation. It really shows up on some trading days, but for the most part, it doesn't. It's kind of a stealth move. People are getting into those dividend stocks. People are getting into those security stocks, fixed income and things like that. Big money will do that months in advance. So like I said, I don't think we're in danger right now of that big sell-off or going into a bear market or anything like that, a bear correction or anything like that right now. But it's starting to look like the light at the end of the tunnel. Other than that, guys, the country's still reopening. Texas and Florida are really the superstars of this. I've been talking about Hawaii tourism is really starting to kick back in, and that's without the Asian traveler, which is a mainstay really in Hawaii. So you can imagine when India and Canada and Japan get this COVID really under control and the travel starts opening up, things will really start going. And then you really got to worry about inflation. You saw the Dow, right? Today, the Dow's actually holding up pretty well, all things considered. And that's a lot of it has to do with energy. Oil was pushing up higher again, just starting to break out again. We still think easily, maybe we get into triple digits by summer, which is only really a month and a half, 2 months away. And that's why we're playing those energy plays we talked about. Look, Suncor released earnings last night. You guys that follow the stock of the week, Suncor released earnings last night. Great earnings. Saudi Aramco, another energy stock, right? Released earnings this morning. Good earnings, little 30% growth there. You're starting to see energy start to get its footing. And what we were anticipating when we first tried the open and we lost some of those energy trades. And what happened was we had the second shutdown, right? And so it kind of killed that. We're really getting into this footing on the energy, and it's starting to show with your ETs and some of your big oil companies and stuff like that. We still got 4 more days of earnings, right? Today, Wednesday, Thursday, and Friday. We'll see a little bit more earnings from energy, and we got some retail in there too. We'll start seeing some of these retail trades get their earnings reports. Other than that, guys, we're just kind of stepping back. Like I said, we tapped out that spider play for a nice little 81% in 5 days. And then we kind of took some of that money and we put it on a little bit long of a play on the Dow Jones DIA. We're sticking with our stocks. Like I said, if you guys are following the stock of the week, Suncor was a stock of the week. It's having a great day. ET, right? It was a stock of the week way back when it was $7. Just a lot of these stocks. VSTO, a lot of people did turn their back on VSTO, right? When we first released it, what happened? It kind of pulled back a little bit. Now it's blasting the highs. You see how you be patient there and keep your thesis. Now, the stock of the week, guys, we're going to release that thing first thing in the morning. We always try to release the stock of the week. And, you know, we've done this a couple of times where we release it on a Wednesday or a Thursday. And the reason is we want to see a little more firmness out of this market. Well, let's see if it's get us a little bouncy here. We don't want to buy into another sell down leg. What we'd like to do is see the sell down complete, start to get a little bullish, and we buy into that. And so we get a little acceleration, right? We want to get the best price possible, and we want to get you the best price possible. And remember, we buy it when we talk about it. So we're just as concerned with that entry as you are. Other than that, guys, let's have a great Tuesday, okay? It's a money-making Tuesday, which is always fun. And we set up another little trade here. The markets, we can go let's go take a look at the markets together. I share my screen here, and you can see, let's refresh CNBC. All right, and you can see that Dow is kind of pushing back up a little bit. It's been down a lot more than that. The NASDAQ is your problem. That's where your overvaluation is. And, you know, I had a conversation about the difference between the NASDAQ and the spider because we were talking about overvaluations and the PEs and stuff. There's a big difference between the S&P 500 and the NASDAQ. And I'll tell you what that is. It's called dividends. And that's what saves the S&P a lot of times when that NASDAQ, you look at it right now, it's down almost, 2.5 times what the S&P is down. The Dow is actually back over 34,000. Why? Because these have got your brick and mortars, your safety stocks. When big money wants to protect their money, they put it in great stocks that pay great dividends with great balance sheets. The Vix spiked over 20. We talked about that before. You can see it over here. It's right now, it's at 2061. Anytime it gets over 20, that selling becomes real. And when it's under 20, basically you're in a sideways or, you know, a little bit highs, a little bit highs, a little bit highs, bullish tone, very bullish tone. But a lot of times that $20 level on the VIX is kind of an indicator that something is happening a little bit more dramatic than your normal selling. And it looks like everything's kind of catching a bottom here. We'll see if we're right on this Dow play. Other than that, guys, crypto, right? Crypto is still the story of the day, man. Ethereum's softening a little bit. It's down $4. But that's on top of what, the 3,000 that it's 300 it's up in the last few days. Bitcoin got a little beat up this morning. It's down about 6%. Dogcoin. Look, guys, we don't trade Dogcoin. Okay, we consider Dogcoin like how can I put this? Dogcoin is like the meth of crypto, and it's all fun and games until the dope runs out. Right? And then it's a crash and burn. But we don't trade Dogcoin. But if you do, congratulations, man. The thing's up another 30% today. Let's keep in mind that kid that we saw the big article last week, right? He turned what is $100,000 nest egg into $1 million. And he's actually waiting for another move on Dogcoin before he takes some money off the table at 10 million. Again, he has a thesis and he's disciplined. He's disciplined enough. And this is a great lesson for all of you, whether he's right or wrong in the end. Respect that discipline and respect that thesis that he has. And he straight up said it, right? He put his nest egg into it. He wanted to make he wants to make $10 million on it. And I believe if he gets, I think 76 cents or something was the level, but he said he's not going to cash out. When it gets to 10 million, he'll cash out $1 million, and he's sticking to it. He could have cashed out $1 million days ago. Right. And remember that it's that discipline. It's that discipline. It's that discipline that's going to make you wealth over time. The stock market's never a sprint. And if it is, you're running it wrong. It's always a marathon. All right, guys. So, and girls out there. So look, let's call it a Tuesday. Okay. We'll be back tomorrow morning with the stock of the week. You guys are going to really enjoy this, like always. And other than that, you guys have a fantastic Tuesday afternoon. All right, gang. We'll see you guys in the morning.